Welcome back to another video. So in today's video I'll be going over a stock, Corsair Gaming, ticker symbol CRSR. But if you're new to the channel, definitely consider subscribing. I'm going to go to get to 2,000 subs. So now into the video. So why are we talking about this stock today? So we've got a major buying update with this stock. The stock is massively undervalued and we'll be looking at why in this video now. So who exactly are Corsair Gaming? Corsair Gaming Incorporated, together with its subsidiaries, designs, markets, distributes gaming and streaming peripherals, sorry if I butchered that word, components and systems in America, Europe, Middle East, Asia and the Pacific. The company offers gamers and creators peripherals including keyboards, mice, headset and controllers, as well as capture cards, studio accessories and others. It also provides gaming components and systems comprising power supply units, cooling solutions and computer cases, and DRAM modules, as well as pre-built, custom-built gaming PCs and other PC gaming software comprising IQ for gamers, Elgato streaming suites for content creators. The company sells its products through a network of distributors and retailers, including the online retailers, as well as directly to consumers through its website. Corsair Gaming Incorporated was founded in 1994 and its headquarters is in Fremont, California. So as we can see in the Corsair Gaming stock now, just have a quick look at the graph over the last day, week, month, year, etc. So as a whole at the minute, the stock market is quite down. It's a bit of a bloodbath at the moment, but this stock is down 4%, just under 5% in the last day, down almost 10% in the last week, down 27% in the last month, as well as 8% in the last 3 months. But as you can see in the last year, they had a quick rise pretty much over the space of a couple of months from $15 all the way up to $51, which was their highest price. There we go. Yeah, just $51.21. Then we saw a drop down to the 30s. Quite a few more continuous up and downs at the moment. But on this particular date here, this is 8th, 9th of February. This is when they announced their earnings for the last quarter of the year in 2020. And even though it was a good earnings, which we'll take a look at shortly, the price stumbled from around $46 and it's gone all the way down to $32 in the space of a month. So why exactly has that happened? So I came across this article which was on Investor Place, which states Corsair Gaming stock post earnings dip was entirely unreasonable, and it'll tell you why in this article. It's basically stating that the community of investors or retail investors sort of got this one wrong on this occasion, while the Wall Street analysis rate this as a buy. So as you can see, 10 out of 11 analysis on Wall Street rate it a buy, and one analysis rates it as a hold. So obviously the experts, they're still generally bullish on this stock. That being said, with the perfectly good results on the 9th of February, which I stated earlier, that's when the stock started to dip from that date, which is around about a month ago now. So ever since then it's gone down around 8-9%. They released the data for its fourth fiscal quarter earnings report, which was above what expected. They had a readjusted earnings of 45 cents per share, which beat the Wall Street analysis consensus of estimate of 43 cents per share. Corsair Gaming reported its fourth quarter sales of close to 556 million, while Wall Street was bracing for sales of 530 million. So again, they have the Wall Street beat. So the bottom line, basically what it says is, while the market is down at the moment, this stock is primed for growth in the future. So we'll take a look at what analysis rate at now, and you can check out what the actual share price currently is at, as what we've already seen. But a lot of the analysis are rating this at a buy. So while the market has blood on its hands at the moment, you've got to stay tight and buy more shares of this stock at the discounted price. The article we just looked at touched upon the numbers of the revenue and finances, but now we'll take a little more of a deeper look into the numbers. So as we can see in December 2020, pretty much all the financials up from September 2020, so we have an increase in revenue by 70% and a massive increase in net income, over 600% there. Everything. The only thing that's in the red is the net change in cash, which is down 68%. But all in all, the numbers are looking good. And we can take a look now at the quarterly earnings. So in the first quarter, they received 350 million in earnings, and it just slowly, gradually goes up to the final quarter, which we saw was over 550 million in earnings. And again, even annually, over the last 3 or 4 years, since 2017, we've seen increases in the revenue and a slight increase in earnings as well, which is nice to see. So we started 2017, they had under $1 billion in earnings, and it slowly grew up, and then they surpassed that in 2019, around 1.1 billion in earnings. And obviously now in 2020 overall, they've got over 1.6 billion earnings. So the numbers are adding up. They're getting good earnings reports, and which the main thing is the earnings are, the revenue is growing as well, and we're seeing a slight increase in the money being kept, as well as the good consistent revenues over the last few years. A Wall Street analyst predicts that to continue. As you can see on this graph here, this is just analyst forecast, by the way, so take it with a pinch of salt. This forecaster predicts that they're going to get over 3 billion in revenue, keeping 329 million of that in earnings. So we can see that hopefully potential rise. This is basically, I think it's just going off sort of past performances as well as predictions for the future, what happening within the company with regards to sales. So we see the blue revenue graph on a nice steady rise there, and also we see catching up at the bottom with the green line, the earnings. So they'll be keeping more of that, maybe one day possibly paying dividends, or who knows. But it does look quite promising for this stock. Or we do, obviously, like we touched upon before, gaming equipment is absolutely huge right now, so plenty of market for that industry, and this company seems to be doing really well with it. Lots of gaming YouTubers as well as people who just game in general, so high hopes for the revenue in the future. We'll just have to wait and see. So now let's see what the analysis on Wall Street is saying. So currently they're giving this average price to this stock target of $50 with a high price of $55 and a low estimate of $48. And as you can see now, as the price is currently at $32.70, it would make sense based on any other research you do as well. Going in line with the analysis, this stock is a buy. So what I would really do with this stock is, while we've still got blood on the market in the moment, it could drop further. So if you are looking to invest into this stock, I'd probably buy a share now what's at $32.70, and then try and wait for it to dip to $30, and then try and wait for it to dip again to $28. If not, it might not do that, it might rise back up, but following the suit of the market at the moment, everything's pretty much red, even from Apple to Tesla, Microsoft, all the big companies are all red. So I do think we could see more red for this stock, but try and average down your prices, get a hold of many different prices, low or high, because the estimates for this stock are a lot higher than the $32, which it currently is at. So for Wall Street analysis, give it as a buy. So we've got a $48 buy, $49 buy, $51 buy. So it's quite a few different price ranges, but all within the obviously sort of targets we just saw then. But interesting, one of the analysts who reiterated it buy, which was just 4 days ago now, at $48, which is Colin Sebastian, and Colin Sebastian is ranked 27 out of 7,000 analysts on Wall Street. He has a success rate of 72%, which is in the last year, with a 33.5% gain, and he gives that a strong a buy at $48. And as well as that, the four analysts in general, they do give this stock a buy, a strong buy. So obviously, again, do your own research for this stock, but the signs are looking good. You sort of got to hold out while this stock is falling and try and add in the positions, like I just said. Try and do the strike prices, get it down to $32, $30 and $28, and then we'll just have to see what happens. But the signs are good for the future anyway. So on that is pretty much it with today's video, guys. Let me know what you think in the comments below, whether you're interested in this stock or not. Take care. Bye.